Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, February 17th, 2025. Hope you guys are having a good long weekend, and let's get started. So, Friday, it looked like we were going to try to make that run for new all-time highs. I didn't really trust it all that much, but I wasn't going to fade the trade just because they were there, and I actually put out in the trading room to take on a Condor trade, and I put it in, and I don't know why I didn't double check, but I thought I was actually in the trade, and I had to step out, and I came back, and it actually was way below what I was looking to sell the premium for. So I stayed out of it. I didn't want to try to, because I was gone for like an hour. And what I was just like, I don't really want to try this anymore with it because it was getting, just a little late. There was no premiums involved with it, and that was pretty much it. So it would have worked. It wouldn't have been anything crazy. Maybe a couple thousand, maybe 1,000. I'm not sure what the premium was that I was trying to get, but in any case, it was. I didn't get filled, and I thought I did. So no trades on Friday, and again, the market really did nothing. So let's take a look at where we are. This looks like it's just a bull flag. So if we're going to follow it and just say that it's an ABC, I would expect the S&P to come down to the 6103, find support somewhere here, and then head up to new all-time highs. That would make the most sense. Now, the thing is that if they lose this right here, then we do have some support right here at the 6092. But the heavier support comes all the way down to the 60.75. So this is kind of important. I'm gonna do both of them here. So this is the zone that the bears would need to get through, and if they do, then we would see the move coming down to the 60.72. Now, if the bulls head higher here, it's kind of hard to say exactly where the top would be. I mean, if they're going to extend this and say keep it going for a month or so, I mean, I just don't think that the odds are great for that happening. And really, for my main reason is just retail traders are pretty much positioned for that, meaning that the put call ratio is still at that extreme, very, very low levels, meaning that everybody's just sitting on calls right now. And the VIX, we've had a couple spikes here and there, but it's coming right back down. So usually you don't start sustained rallies like that. Like I said, I've been taking things on a day-to-day basis right now, but it's right now the pattern looks like it's supporting the bulls, meaning that we're going to take it out. Where it goes from there, I can try to get another clue from some of the other charts and just using, what some say ABC patterns, but it's really, it's not easy to say where it would go. So I'm just going to leave it at this. If these highs get taken out at say the 61.30 level or 29, wherever it was, then from there we're going to look at a move. I would expect it probably somewhere into the 61.75, maybe, and probably even the 6200. So those would be, the round numbers are always kind of magnets if it does get breaking out. But again, we don't have any sell signals, so there's nothing telling me that you need to start shorting this market at this particular time, because this looks like a pretty good consolidation period. Now, this is the risk, though, is that we just came up and just touched the top of the range, because if you look, besides this little dip right here you go, up, down, and now we came back up again. So don't, as much as I'm sitting there saying they're here, they're holding it up, it makes the most sense to head up. Don't rule us out if we come down and test this 59.64. There's a lot of things that have been really, you say, jolting this market, whether it be the deep stake or whatever, all those different things that happen, but the tariffs and that stuff. So there's stuff that can shake the market up, and it's you just don't want to be complacent. If I had to lean one way, I'm leaning to the upside just because of the pattern, and we're here. But my eyes are wide open with a move to come back down to the 59.64. So taking a look at the 15-minute chart, we have a little bit of a bearish divergence right here, as you can see, because we made the higher high. Wave structure, it's really kind of sloppy, to tell you the truth, because here you'd have 1, 2, 3, 4, 5, but this is the biggest move, so this is more of a 3, 4. It really is sloppy, and if there was a better, say, wave structure that I can show you that was simplified, I would. But you guys know I really just look at really the Elliott wave when it's at an ending dialogue. Like, I believe that we're coming to an end of a move or something to that extent. And this, we can go either way. So I'm not even going to guess what, because like I said, it's really, really sloppy, where a lot of them are overlapping. The cleanest part would be to the upside, just because we haven't taken out any of these types of supports. But I'm just going into stuff open-minded tomorrow. The futures are up about 10 or 12. I'm not exactly sure, but there's I think maybe they are going to try to gap it up over the new all-time highs tomorrow. Maybe we just kind of hang out here and do nothing. So I'm going to take it on a day-to-day, really trade and not really try to look too much further into the future. So let's see what plays out tomorrow. Have a fantastic rest of your long weekend, and I will talk to you guys in the morning.